Hello, my dear students. Welcome back to this interesting session of discussion of MCQs for your CA Inter Auditing and Assurance paper. As I've told you earlier, if you want to score good marks and if you want to plan a nice smart study, okay, this is the area where you need to give special focus and special attention. Okay, yes, so without wasting our time, let's make the most of the MCQs that we would be discussing today. You would realize that while discussing the MCQs of company audit, you would have to touch areas of corporate law also, because here we are specifically focusing on Companies Act 2013, which we have learned in detail in our paper of corporate and other laws. Okay? Yes. So come on, let's begin our journey of the MCQs of the chapter company audit. Okay. Now, the first question that appears on the screen is, where at any annual general meeting, no auditor is appointed or reappointed, the existing auditor in normal circumstances shall. Okay. Now, if you remember section 143(1), then there, in that case, we have seen that, section 139(1), my dear students. Yes, we have seen that an auditor would be appointed by members in the AGM in case if there is no audit committee. In case if the audit committee is present, then audit committee would recommend and the entire procedure would follow, which is very different where audit committee needs to be appointed by the company. Okay. Yes. Now we have seen that in every AGM an auditor stands to be appointed or reappointed. Right? Okay. Yes. Then if no auditor is appointed, tell me, my dear friends, can a company afford to keep the chair of the auditor empty? No. So there has to be an auditor. Now if there has to be an auditor, yes, now company with malicious intention also, the directors may not have, yes, the members may not have appointed the auditor. Yes. Okay. Yes. So we cannot leave any scope of keeping the chair of the auditor empty. So here in this case, the existing auditor, yes, the existing auditor shall continue as in the capacity of the auditor where no auditor is appointed in an AGM. Right here. So if we see the options A, B, C, option A says recommend a new auditor. Option B says retire from office of auditor. Option C says continue to be the auditor, and D, none of the above. So likely here the most apt answer goes as option C. Option C would be the correct answer which we would choose. Okay. Yes. Remember, my dear friends, just knowing the correct answer is not important. You have to be very careful as to which alternative you choose in your answer papers. So be very specific, be very clear in your minds and in your understanding. Okay. Yes. For more such videos, you can press the bell icon and also subscribe to the channel if you feel and if you aim to excel in this paper of auditing and assurance. Okay, let's go ahead with the next question. Where a company is required to constitute an audit committee under section 177. So here there's a company wherein there's an audit committee. And all appointment, including filling of a casual vacancy, shall be made taking into account. Yes. So here wherever in a company there's an audit committee, right? The auditor shall be appointed on the recommendation of audit committee, right? So here the options are recommendation of board, such committee, shareholders, directors. So here the most perfect answer would be B, right? Recommendation of such audit committee. No problem. Let's go ahead further. Question number 30. The auditor appointed under section 139 may be removed from his office before the expiry of his term. So here when we are speaking about a removal of auditor before the expiry of the term, that means we are referring to section 141 wherein auditor is removed before the expiry of his term. Under this section we have seen that here the members would have to pass a special resolution for removal of auditor before the expiry of his term, only by a dash of the shareholders of the company. So here special resolution is the right answer. Let's go ahead further with the next questions. Yes, as per section 140 of the Companies Act 2013. Okay, before I go ahead with this example, let me just tell you, my dear friends, if you want the PDF of all these MCQs, wherein more than 1000 MCQs are available, you can join the Telegram channel. The link to the Telegram channel has been given to in the description box. You can go to the Telegram channel and download all these MCQs. Okay, yes, let's go ahead further. As per section 140 of the Companies Act 2013. So here again we are speaking about the removal of auditor. Auditor appointed may be removed before the expiry of his term. Okay, so we are specifically speaking of section 140 subsection 1. However, prior approval of dash is required. Under section 141, we have seen that if auditor has to be removed from his office before the expiry of his term, in that case, central government prior approval is required. Yes, Board of Directors need to obtain the central government approval in how many days? 30 days. In which form? Form ADT 2. Then after central government approval is obtained, the same has to be communicated to the shareholders within 60 days. Okay? Yes. And then the members would pass a special resolution and then the auditor would be removed from his office. Okay? Yes. So here we need to obtain the prior approval of central government, my dear friends. Okay, yes, so this is the beauty of MCQs. When we speak of MCQs, it is like a quick revision of the entire section of, or rather the entire section of that particular chapter as well. Yes, okay. Further, the application to the central government for removal of auditor shall be made. We have already discussed under section 141, we need to take the prior approval of central government in form ADT2. So here A would be the correct answer. Further, question 33. Every company shall prepare and keep books of accounts and other relevant books and papers and financial statements for every financial year. So here they are speaking about preparing and maintaining books of accounts. Preparing and maintaining books of accounts, my dear friends, we have seen that here while preparing books of accounts, it's the primary responsibility of the Board of Directors, but the books maintained by them have to be examined by us in the capacity of auditor. Okay, yes, so here while maintaining the books of accounts, we have seen the fundamental accounting assumptions need to be followed: going concern, accrual, and consistency. Okay, let's go back to the question. That these financial statements, books of accounts and papers and financial statements for every financial year on, number 1, accrual basis, double entry, cash basis, single entry. So here we have seen that here accrual system forms to be the fundamental accounting assumption, and moreover whenever we speak of accrual system, it automatically directs us to double entry bookkeeping system. So here we need to check. Now accrual system is option 1 and double entry is option 2. So we have to select an alternative which gives us a combination of 1 and 2. So if we check option A, B, C, D, I think it is D which gives us a combination of 1 and 2. So that should be the correct answer. Okay, let's move ahead with the next question. Every company shall prepare and keep books of accounts and other relevant books and papers and financial statements for every financial year which give a dash view of the state of affairs of the company. Here, whenever we speak of books of accounts, okay, the books of accounts are expected to give us a true and fair view. Why not a true and correct view while preparing books of accounts also? Because books of accounts preparation is also subject to human error. Okay, yes, so which view? Yes, here always speak about true and fair view. So that goes to our option alternative D. Okay, let's quickly go ahead to the next question. Yes, the next question. Question 35. As per section 128 of Companies Act 2013. So when we speak of section 128 of Companies Act 2013, here we are speaking of maintaining of books of accounts. Yes or no? Okay. Yes. Now these books of accounts have to be kept at the registered office of the company. Can they be kept at other place? Yes. After whose approval? Come on. Yes. Who thinks fit? If the Board of Directors think fit, it can be kept at some other place also. But the registrar needs to be informed. In how many days? 7 days. Right? as I told you at the beginning of the session, Audit and Companies Act 2013 is what we are studying. That is company audit. So there might be few areas of such sections which are not directly related to the audit part, but are also related to corporate and other laws, right? Without which we cannot understand the audit part of the financial statements also. Okay, yes, so come on, let's come back to the question. As per section 128 of the Companies Act 2013, every company shall prepare and keep at its registered office books of accounts and other relevant books and papers and financial statements for every financial year. Can books of accounts be kept at any other place than the registered office? Yes, they can be kept. Okay, fine. Now let's look at the alternatives and choose the best answer. Alternative A. Yes, books of accounts may be kept at registered office or at such other place in India as the board of directors may decide. So here they say that as the board of directors may decide. Alternative 2 says yes, books of accounts may be kept at registered office or at such other place in India at the discretion of shareholders. Option C says no, which is not correct, and D says none of the above. So if you have to choose between alternative A and B, it is alternative A, because it is the board of directors. If the board of directors decide that yes, the books of accounts need to be maintained at some other place than registered office, it would be board of directors to decide so and not anyone else. Okay, so the correct alternative here should be alternative A. Okay, let's quickly move ahead to the next question. If the board of directors decide to keep the books of accounts at such other place, the company shall thereof file with the registrar a notice in writing in how many days? The registrar has to be informed of such other place of maintenance of books of accounts within a period of 7 days, my dear friends. Yes, within a period of 7 days. So alternative D stands to be the correct answer here. Okay, let's quickly go ahead to question number 37. The books of accounts and other books and papers maintained by the company within India shall be open for inspection at the registered office or at such other place in dash. So here they are speaking about inspection of books of accounts. Books of accounts are maintained. Now, who can inspect the books of accounts? Come on, board of directors or shareholders? We have seen that the access to the books of accounts is that only and only of the directors. Okay, so here partly the question is answered. Who can access, who can inspect? It's the directors. Okay, now in which hours of the day? Come on, whenever we speak of company, it is always during business hours. Yes, so anyone, a director, yes, by any director can inspect the books of accounts, yes, within the business hours. So let's choose the alternative which gives us the combination. So come on, quickly tell me, my dear friends, which should be the right answer. Come on, quickly. Yes, alternative A, B, C or D. Yes, B and C cannot be the answer because they are saying that inspection by shareholder. So amongst A and D, it should be A because it is director and during business hours. So alternative A stands to be the correct answer. Okay, let's quickly go ahead to the last question of today's session, my dear friends. Okay, yes, if the books of accounts and other books and papers maintained outside the country and any other financial information is required by the director. So if director requires any information, in that case, the company shall produce such information to the director within dash days of the date of the receipt of written request. Okay, so if director makes a request of any financial information from the company has to produce such information to the director within a time span of, think, within a time span of how many days, my dear friends? 7 days. Okay, yes, within a time span of 7 days. Okay, you must be wondering, why is it that ma'am is taking this session in completely, entirely in 100% English language? Understand, my dear friends, whenever we speak of MCQs, it is hitting the bullseye. And because our papers would be in English language, I would want you to think English and get well versed with it so that it would be easier for you to answer these MCQs. Okay? Yes. Come on, my dear friends. See you again. Same time, same place. Yes, same platform of YouTube channel tomorrow. And also do not forget to press the bell icon for more such interesting videos. Till then, take care. Bye-bye. And keep revising.